traders, and welcome to Pepperstone's Technical Analysis Market Wrap on Friday the 19th of June. So I've seen some good dollar index strength over the last few hours. The 4-hour looks like it's about to print a series of higher highs and higher lows off a level of support, so that's going to have an impact on a lot of the majors, the US Dollar CAD in particular, and also the Euro USD. So we'll take a look at those two, and we'll also look at the S&P 500 and see if there are any opportunities that are presenting in the next few hours and early into next week.
So we'll make a start on the Aussie USD. We can see here that it's definitely obviously been in an uptrend. Now it's come back down. It hit those highs that we've been talking about for a little while. That was a little while ago now. It's come back down and touched the 20, which we always want for a continuation. But what it has failed to do is basically get up and make a new high. Now that definitely concerns me a little bit, because generally what we want to see off a 20 is a big spike up and potentially push to a new high. But because we got this breakout, we can see that we've had a series of good higher highs and higher lows, and it eventually hit that zone that was going to find resistance. It's failed to reach those highs again, so straight away we're on the lookout for a potential reversal here. That does worry me. Even though it came back to touch the 20, it has failed, and it's coming back and trying to test the 20 again. Now it finds itself at a place of roll reversal, so there's no question about that. If it does push down and get below the 20 and actually closes down there today, I think that we're probably going to, well, we're definitely going to see what looks like a change of trend on this one, and we're probably going to be pushing down to around that sort of 66.50, 66.60 level. Sorry, so, and that's going to coincide with the 200 moving average. You can see that's starting to level out there and float. So this is a very logical zone for it. You can see it easily getting to here. But first we want to see a close below this level here. We need to close it below the 20 on a daily chart. Then we've got our lightning bolt effect. So we just want to see it close just below here. And then I think we're pretty good to go to about that sort of 66.60 level, which, you know, it's a pretty good support level. You can see it's been support here. It was resistance there. It certainly was resistance here. And the fact that the 200 moving average is going to be in the vicinity at around that time is a big plus for this one. So certainly one to watch out for, but it's looking probably shorter than it is longer at the moment. I would be looking for a break below the 20, and then probably looking for the shorts on this one. All right, we'll go over to the US Dollar CAD. We'll start on a daily. Okay, we've seen, we've talked about this for a little bit now. Like we can see that the strength has picked up off this roll reversal area. You can see it was very, very clear resistance here. Great support, straight up. Now it's basically pulled back to about a 38.2 fib. I'll draw that on so you can see that. Let's have a look. Oops. I'll quickly pop this on, and and you'll see the fib that I'm talking about. It's basically pulled around here to that 38.2 on a daily. So it's a really, really nice move straight up. What we want to see now, obviously, is a new high taken out before it starts to get to this level here. Our obvious serious target is the 138.70. If we get enough dollar strength, we could certainly see it getting there. No drama about that, but it's got a bit of work to do. Okay, it's got to push past the 20 moving average first, and even after that it's got to get past the 50 well before it does that. So it's certainly got some work to do, but it's definitely pulled back to the right area. And when we drop it back to 4-hour and 1-hour charts, you can see that it's made that bit of a channel at this level. We know it's a serious level, no question about that. We've got a series of higher highs and basically higher lows. Now a very shallow one. I mean, doesn't excite me that much on the 1 hour. You can see that it's only just above it, but it is above it, so there's no question about that. It still requires a stop loss behind this level here, though, for mine. Like it still needs room to move. I don't totally trust that there's enough room for this one yet. It has got the 20, the 50, and the 200 moving averages behind it on the 1 hour now, so that certainly does give me a bit of confidence. It's also got the 20 and the 50 behind it on the 4 hour, which is obviously a really, really good sign. You can see that consolidation around the 38.2, so that makes it a little bit clearer. This is the 4 hour chart. All right, so obviously what we want to see is a break of this high here. We want to see it take out the 136.80 area. This is the first target. So if you've got a couple of trades on, this is probably the first place, because this is going to be the first place it's going to really find a great deal of resistance. It's not going to get past here easily. Okay, so probably at the very least you want to be changing your stop loss up to a break-even position, or potentially following the higher lows, which is our preferred method there. Then, you know, it's going to move on to around that sort of 137.50. It's going to have, yeah, it's got this area here. It doesn't concern me as much as this one. This is the real zone. The 138.70 is going to be the real point of resistance for this one. But in saying that, if this is a fast move, it's not going to break through this area that easily. It's going to have the 200 right in its face as well. So that coupled with the 200 is going to cause a little bit of concern for it here. But by then, you should have well and truly taken some profit off this trade and probably broken even the rest. So it's a pretty good trade, this one. I'm pretty happy with this one. We'll move straight onto the dollar index, actually, because this helps basically justify what we are seeing there. A dollar index strength is going to see the US dollar CAD obviously go up. You can see now on this one, it's played the game off this support line very, very well. It's had a really strong week. It's been, even on the smaller time frame, it's been some really good trades on this one. It's got the 20 moving average right at it now. On the daily, which is significant, but there are good signs for this. You know, it's coming out of the signal lines coming out of the MACD histogram, which we always like. Stochastics on the rise, RSI on the rise. So a lot of good things happening for this one. We'll take it down to a 4 hour. Now, just as importantly, we're seeing a series of higher highs and higher lows. Okay, so that's what we're really looking for. We love this. We needed to break this zone. Probably good and proper. Look, at this stage, you know, it's pretty much, I mean, it technically hasn't closed above it. Okay, so it can, I mean, realistically, we haven't had a close above this level here, which is the 97.40. We want to see a close probably at 97.45 to 97.50. That would convince me that we've got our series of higher highs and higher lows on the 4 hour. Obvious target is the 200. That's going to be the first sticking point around that sort of 98.50, but that's going to get the US dollar CAD well on its way to what we're expecting. Okay, MACD histogram is rising, so we know that the 12 and the 26 moving averages are separating. The 12 is starting to accelerate away from the 26, which causes the histogram to rise. MACD signal line still well and truly inside that histogram, which is obviously a really good sign for it. Okay, so that's on the 4 hour. So that really helps the US dollar CAD trade. So when we go back to that, you know, US dollar strength is obviously going to help this trade propel to where we need it to go. So those two are working really well together. So it's a good idea to set your alerts on both of those if you're not in it already, which you probably should be if you were watching this this week. But if you're not, set some alerts. A break on that dollar index will see this one hopefully travel in the right direction for us with some good moves. All right, we'll move on to the other US dollar based pair that is not playing the game with the dollar index. Okay, so this one is an interesting one. It hasn't been really moving in the dollar index's favor, or as it should for the dollar index, for quite some time now, so this is no surprise. But this 107 level, we've talked about it a million times, and the truth is not much has changed. So since last week, we haven't had a hell of a lot of movement in this space. It's been a very low-ranging move. You can see that it's right here again. I mean, it's just below. It's 106.99, so as good as 107. Very, very strong level for it. You know, look, with dollar index strength, it would be hard to see this going, you know, very low. I think it could definitely go a little bit lower, but it's going to be difficult for this to go really, really short, and the dollar index strengthens. So if the dollar index weakens for some reason and falls away, yeah, this could see this break to the lower side. But yeah, the preferred trade is certainly to the upside on this one. Okay, so if we get a change of trend on a smaller time frame, you would like to see this one get up to probably that sort of 107.90 to 108 again. The dollar strength should help, but it's not going to give it the boost that the other ones are getting because it's not in sync with it 100% at the moment. But yeah, that's okay. The problem we've got here is the 20 and the 50 are obviously in its face, but that's going to happen when we've got a very low-ranging market. The moving average is going to catch up to price, so it's no surprise to see it started to consolidate there. We have to take it to a very small time frame, and you can see that the ranges, this is a 15-minute chart, we've got to take it right out to even get some movement. It's very, very small ranges of movement. We've got a 15-minute change of trend. You can see the support was here. We've got a high here, higher low, and a new higher high. We want to see this level broken here. You know, if we break the 107.20 area, yeah, it's got a bit of work to do on the 15 minutes. You can see that, but it's just one of those trades. I want to see probably two sets of higher highs and higher lows here. So I'd like to see this broken, probably come and test the 20 again. on the 15-minute chart, and then hopefully we're off and running, and then we can look at the bigger time frames to get to the zones that we're looking for, which is around the first instance 107.60, first place of serious resistance is going to be, but then onto the 107.90 to 108. Look, it doesn't excite me. The yen is not exciting me a lot at the moment, mainly because it's not really seeing the moves. But yeah, there's no question that is a double bottom on the 1 hour. It needs to do the 15-minute reaction that we just talked about just then to actually make this double bottom play out. And if it does play out, the distance between the trough and the neckline is going to be straight into the resistance that we're talking about here. So again, not a fantastic trade, only you're probably talking about 40 or 50 pips, but it's still a scalp. You know, when they're not moving a lot, you've got to scalp them. And this is one of those ones where the dollar index could potentially help it a little bit. Not like to the full extent, but it can certainly give it a little bit of a shove along if it gets up there. Still a little bit of work to do though. All right, we will move on to the S&P 500 next. So yeah, this is an interesting one. We've got, look, obviously it's been going up for a long time now. It had that pullback. This week has been a bit of a recovery. We saw that big drop off at the end of last week. It's recovered back to probably around that sort of 61.8 fib that we'd be looking for. I'll pop it on. I'm pretty sure it's pretty close to it. Yep, there it is there. All right, so you can see the 61.8 fib. You know, look, again, you know, that's a bit further than we like it. You know, ideally we like it at the 38.2 and the 50 as a pullback for a short, but this is an unusual, you know, trading instrument at the moment. It's being, you know, basically, its moves are determined by external factors that aren't just technical. So we're aware of that, and we're just going to deal with that. It's at a place of no man's land. The last couple of days have been just very, you know, buyer and seller, yeah, confusion really. You can see the two candles there, not giving us any great information. You know, my preference on this one is obviously, you know, to the short because it makes more sense to go short from here. But, you know, I don't really trust it. I don't think it's a great technical trade, but we've got to talk about it because everybody wants to know what the S&P 500 is doing. You know, what you want to see, you know, look, Stochastic has not been able to get up above the 80 zone again, so it could certainly reverse here. MACD, you know, I've got to take it out because the ranges have been a little bit skewed. So you can see that the MACD signal line is out of the histogram. You know, that's telling us the MACD is dropping. So the 12 is losing a little bit of speed. It's coming closer to the 26. But that's no surprise given that the price is starting to flatten out a little bit. So maybe, you know, maybe this pair's starting to get a little bit tired of the stimulus that's coming out for it, so it could be ready for a little bit of a pullback. The easy trade here is obviously to short it. I mean, yeah, there's two ways it's going to go. It's either going to go and touch these highs here at the sort of 32.30 area, or it's going to get down and retest these lows, which is the role reversal zone. You can see that the resistance was there. We would expect that it's going to find support right here again, sort of at that 29.50. My preferred trade is to the 29.50 because there's more technical reasons to do so on that one, but you've got to rely on the smaller time frames to get a result here. So, you know, go to the, you can see here, it's been very, very flat. This is a 1 hour chart. So, you know, really, if we want to see, you know, that get down to that level that we were talking about, we want to see a series of lower highs and lower lows, at least on the 1 hour. 15 minutes not enough on this one. We want to see it on a 1 hour. And probably later today, you know, when London opens and just before New York, to really get a good gauge on what this one's going to do for us.
So I hope everybody's had a great week's trading. We've had some really good opportunities off some good support and resistance zones. Some of the majors are starting to set up now. So with a little bit of luck, we'll get some good movements into today and into the London and New York sessions, and hopefully have a good start to early next week. Hope everyone has a great weekend, and I look forward to seeing you all next week.